Hey everybody, my name is Ace and I want to welcome you guys to episode 4. It is March 25th and we're another step further on this journey. If you haven't already checked out the previous episodes, I highly recommend it as this will provide great learnings to many and this will also continue upon what we've learned. To start off, I want to talk about the goal of investing and how even though you may not own any stocks or bonds or any investment whatsoever, I want to let you guys know that even cash is technically an investment. It's just that over time it has only lost value. We convert our effort into cash. We then convert that cash into materials or other efforts, such as a new phone or paying someone to cut your grass. You can also turn it into other financial instruments, such as real estate, stocks, bonds, a business, or an invention, for example. Our goal for this show is to make sure that you turn your cash into an investment that only grows over time. Now, I want to take things a little further and talk about how to pick a good company and some of the things you should look for when looking at good companies. Now, I want you guys to also understand that there are possible risks, and by doing more research, we tend to take that risk factor down. This will still be a high level overview, but it will give you a good idea of the things to look for. You have to remember that we are value investors, not day trading or gambling. What that means is that you should only invest if you are for sure about a company. You have to invest like it's your job. You should keep up with the company, but you don't have any plans of selling it for at least 5 years. And you truly believe that is destined for growth. It's just like buying your house. You gotta do your due diligence and understand that house pretty well before you even buy it. Now, I will use a business that I will look over and review the tips that I share with you on that business to see whether it's a good pick or not. The business I want to go over is a fairly big one, just so everyone knows in a general sense what the business is. That is Home Depot. Now, for the international listeners, Home Depot is a home hardware and goods store for any home maintenance, repair, and building supplies. It is the biggest of its kind in Canada and North America. Well, US. Now, the first thing I want you guys to understand is that when you're going over whether your business is good for your portfolio or not, you should be able to understand what the business does, its history, its competitors. Now, Home Depot is a business that supplies everything for homes and also gardens, from appliances to building materials to selling tools and renting tools to home decor and furniture and even vehicle rentals. They also offer a good amount of home expertise and installation. Home Depot has been around for over 40 years and they have only grown their reach into places such as Canada and Mexico. They also offer a pro membership that helps build a relationship with contractors that has them stick with the Home Depot for long. It's important to know what the company does and how their presence has grown over a time period. It's also a good point to go over the company's mission statement, which can be found in almost all companies' websites, investor relations section. The mission statement will show what the company's goals and vision is for the future. Now, you don't need to know the company so in depth. I'm telling you guys to just get a general understanding of the business. Understand their history. Just know exactly how the company is and what they do exactly. Now, take for example, most CEOs of most companies. They may have a high level overview of what the company does, but they may not know exactly how things are developed, how salesmen might be selling their product, or exactly the cost of each individual thing in that product. They may not know those, but in a high level overview, they understand how to guide the company. Now, I'm not telling you guys to think like a CEO, but I'm telling you guys to think exactly how you would when buying, let's say, a home or a car. You generally know the size of the home that you're buying, the types of floors, the types of appliances, the location, the age of the home, and just general things such as, whether it has an AC hooked up, whether it has a nice furnace, whether, the bathrooms have been renovated. It's just getting a general sense of what the company does, just like how you would for almost any of the investments that you would make in your life. Now, the next thing is that Home Depot is in a sector where their largest competitors are Lowe's and Amazon. It's good to understand how a company competes against its competitors and the possible disadvantages it may have and the advantages it may have. This gives you an idea of how this company is positioned against other rivals in the same sector. Now, Amazon, for example, has started to emerge in competing against Home Depot as it offers tools and small building supplies. Now, it may not offer such things as big, buying wood at bulk or, let's say, other kinds of building materials at bulk, but they do offer a lot of the little things that you can get from Home Depot. It's important to note that competitors allows you to evaluate what makes your pick stand out and resist losing market share to these competitors. Market share, by the way, is customers in this field of home improvement and repair sector. So market share being the amount of customers that you got out there. Let's say there's about 100 customers in a town that are looking to buy groceries, and you have 2 companies that are selling groceries in that town. Well, the goal of each one of those companies is to take up 100% or all 100 of those customers and have them dedicated to their store. So that's exactly what market share is. Now, back to the topic at hand. We will have to understand how Home Depot holds an advantage over these competitors. For starters, Home Depot offers customer service, which is very crucial for many customers. So this is something that Amazon does not offer because they don't have an actual store presence. For example, imagine your paint has chipped and you need to touch it up. What you can do at Home Depot is take a sample of that paint to your nearby store and ask an associate to help match it. They will use a machine, if they have it in the store, that will look at that sample and help figure out what type of paint it is. Then the associate will help give you a type of finish, such as matte or maybe it's semi-gloss or eggshell. They'll also help you pick out the right brush or roller. Now, this doesn't just apply to paint though, but to anything that Home Depot sells, whether it's figuring out the right tool for the job or figuring out the right type of appliance or light fixture, or just really anything in the store. They have experts there that are there to help you. Now, Amazon has presented a challenge in how the business operates with small things, such as light fixtures, light bulbs, or other small things, such as even little plumbing pieces that you may need. But overall, Amazon has not been able to harm Home Depot much at all, because Home Depot really works with those big bulky things, and the ability to have a store presence is very crucial in this sector. Now, let's talk about the second big competitor, that is Lowe's. Now, Lowe's is the only competitor that can really go toe-to-toe with Home Depot, because they operate in a very, very similar manner. They both operate retail storefronts that have knowledgeable customer service employees. They both offer a similar product style. In fact, the stores are roughly the same size, and if you didn't read the store's name, you wouldn't even be able to tell them apart. So now, you may wonder how Home Depot takes on Lowe's. For starters, Home Depot has a much larger presence compared to Lowe's. They have way more distribution centers. This only presents a growing market for Home Depot and its competitors. I believe they will come out as the leaders though, due to their store presence and their growth in online sales with the Home Depot website. The next big thing is to assess whether the company has been consistently growing. Remember, we are value investors. We want to look back at our portfolios 10 years from now and go, oh wow, that has grown 5 or 10 times in that span of time. Home Depot has been around for a long time, since 1978, and has been publicly traded since 1981, where they initially offered at $12 a share. Since then, the stock has split many times. From 1983 to 1999, a stock split, for those that don't know, is where owners that have stocks before the split will now have more shares, such as a 1-to-2 split, which means for each 1 share you owned previously before the split, you'll now have 2. These can even be a 1-to-10 or a 2-to-3, where if you had, let's say, 4 shares, you now have 6. Or if you had 1 share, you now have 10. A reverse split is also true. And this is also a thing that can happen, where let's say you have 2 shares, and after the reverse split, you now have 1 in a 2-to-1 split. Or 10-to-1, where you had 10 shares and now you have 1. So since 1983 to 1999, Home Depot had many splits, but still the company's stock consistently grew, and the company grew. In fact, only during the dot-com bubble did the stock ever take a big hit. Even though the company was continually growing during that time and revenues continued to grow. If you had 1 share in 2011, just 10 years ago, for about $32.80, your share would now be worth $358 with dividends reinvested just for 1 share. That is more than 10 times what you originally purchased it for. In fact, from the IPO date to now, for those that really caught this wave early, just $100 would have become roughly $1.2 million right now with dividends reinvested. Over the years, Home Depot has remained consistent and grown along with it. So has the demand for its goods. This is important to look at because businesses should show consistency. This shows that the business is growing, that it has good leadership and direction. Certain companies may perform good for a little while, but have shown volatility. Now with Home Depot, that's not the case. They've been consistently good over a very long time and have a very phenomenal track record. But other businesses out there could show signs of trouble under the surface. So that's why it's good to look at that and really keep that in mind. The next big thing to look at when investing is whether the business has future growth potential. Great businesses always plan deep into the future. They always position themselves and plan for potential hurdles they may face in the future. They plan for growth opportunities in the future and also possible acquisitions they may do in the future. This will help you as an investor to see the growth trajectory for the company and if the company truly has ambition to grow. Now look, nobody wants to invest in a company that remains just stable. You want to invest in a company that looks to become bigger and becomes a household name. If you look at Home Depot, they're consistently growing their store base year over year. But they have also grown in terms of an e-commerce website. This company also offers curbside pickup, which has been big during the pandemic. The company has overall positioned itself very well with the digital shift. Home Depot also has a professional membership called the Pro Shop, which allows big companies or contractors to buy things at a discounted and bulk rate. This has won over many big contractors. And it's honestly stuck like glue for a lot of these guys that stick to Home Depot with the the Pro Shop, and they're not just buying a little bit of things, but they're completely building entire projects with all the lumber that Home Depot supplies and all the basic things that you need for a house. Now, the next big thing to look at is how management is handling finances. Now, how management handles the company spending their money. They determine the dividend payment to shareholders. They determine if the company will be buying back any of their own shares on the market. They also determine if the company acquires any companies, or they also determine how the company uses its money for growth and innovation. In Home Depot's case, the management has done excellent in accelerating growth with funding more distribution centers, creating their e-commerce website, funding the Home Depot vehicle rental, and also paying investors dividends at a reliable rate with great dividend growth year over year. They do pay out just over 60% of their profits in dividends, which is a little high in my eyes, but it shows me that the company understands the rate of growth isn't going to be as fast as it used to be. There is still room to grow. Now, the next key thing to look at is whether the company is trading at a fair price. Sometimes great businesses could just downright be too expensive to purchase at the time. This is due to the market either projecting for upside in the future, which means that the high price today is because investors believe the company will grow a lot in the future, where the company is just overvalued. I will dig into these metrics, into the things that you can look into in the future, in a future episode. But to keep things simple, when I say a stock is trading high, I mean it's trading high compared to what the company is bringing in for that share's worth. For example, the goal is trying to buy into companies that are $1 for about 50 cents, or a company that may be worth 30 cents but is selling for 50 cents, but you believe the company is growing very fast and you've done your research and it's growing roughly about 100% year over year. So it may be 30 cents this year, but it's been growing rapidly and it's projected to grow to 60 cents in the next year. With Home Depot, I don't think the growth will be as rapid. The current price is about $303 a share, and I think it is an okay price. It isn't attracting me yet as an investor, as I like to buy stocks, great stocks actually, at great prices. And my money is better used in other sectors right now. A big point I want to make with any asset is that no matter how many reasons you may have to buy a certain stock or investment, someone had sold that and might have had very compelling reasons to sell it. So make sure to look into those investments to understand the whole picture. Because any stock that you're buying, somebody is selling. Overall, Home Depot is a great business, and I hope it served as a great example of what to look for when looking into a business. These are just a few tips, and in a future episode, I want to go over some of the financials and some of the metrics that you can look into when looking into a stock. Thank you guys so much for listening to this episode. We have been growing at an exponential rate, and I want to keep expressing how grateful I am to all the listeners out there, and how excited I am that the show has been growing so rapidly. Let's keep growing the show and make sure to share it with your friends and family. If you have any questions or want me to talk about anything, please send an email to theaverageinvestors@outlook.com. It's also in the show's description. Now, it's time to end this off. In next week's episodes, we will talk about real estate. So take care, everybody, and stay tuned.